Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're talking about the lost decade. The All Ordinaries Index is only up 5.4% over a full decade, the worst performance in over 100 years on the Australian share market. Retail investors, they're at their lowest ownership level since the turn of the century. Joining me today is Neil Carter from IFM Investments and Michael Glennon from Glennon Capital to talk about this. Michael, does a bad decade get followed by a good decade? And have we got good times ahead?
I hope we've got good times ahead. No, I think we should have good times ahead because we've got very low interest rates, so very stimulatory. I think it's conducive to businesses setting out plans for future growth.
Okay, Neil, 5.4%, terrible performance. As I said, one of the worst. I can't get anyone to tell me that the market's cheap, that it's a good buy. We've got housing market, residential housing market on the fly, been up a lot more than the equity market. How do you see it unfolding over the next few years and start of the next decade?
Well, I think you've got to look at relative valuation for a start. So the equity market is still giving you a 4 or 5% dividend yield, and compared to putting your money in the bank where you might be getting paid 3%, I think that looks attractive. So although the market's on 15 times PE, to me equities are still a buy.
And are you a believer, like Michael said, lower interest rates for longer?
I think I'm in the lower for longer camp. I think going forward though, there's going to be a real mix in the stock market between the old sectors which are struggling and the new sectors. We are seeing a lot of new technology coming in disrupt, which we're going to talk about. And I think you've got to be really selective. You don't just buy the market as a whole, you've got to pick the good bits.
So, Michael, it's okay to get valuation arguments, but we all like to see growth. We all know earnings is the fuel to higher share prices for individual companies. Where's that earnings growth going to come from?
If you have a look at the market in total, there's a lot of small caps that are growing. They're doing really well. Unfortunately, they're very expensive because the market's really seeking out those growth type stocks. So it's that thing where, the tide's not rising. So, you can't be in the market and do well. You need to be very selective about those stocks that have got growth and making sure you're not paying too much for them.
So we can't really rely on the resources sector. They've had a terrific 15 years and they've come off the ball the last couple of years. Which sectors in particular do you think where we can find that kind of growth and where we can head towards?
I think at the very smaller end, I think you're getting there's a lot of technology stocks that are coming through that are cheap. Agriculture has been very good for the last couple of years. I think it'll continue to be good. There's more assets coming to the market. They're being valued by overseas players a lot more than they were historically. So there's a lot of pockets of value. It's just seeking out those pockets.
Okay, Neil, we're very top heavy. We've got the top 10 stocks in Australia basically control the index. Do you see any emerging companies that appear in that top 50, top 20, like a CSL over the last 10 years? Is there any going forward or sectors that excite you?
Well, I agree with Michael in terms of the technology sector. I think telcos is also a good space. I think we're spending more and more of our available disposable income in that area and in media and content. So I think those are areas where it's worth having a good look around.
And another comment I always hear is that the Australian economy is a very narrow economy. It's not like the US where there's great technology, we're moving forward. Do you share that pessimism or do you think Australia's got a good future?
I think we see some bright spots, and I think we do have an environment here. English language is a big help, but I think we can produce products which we can take to the world, and I think those companies with that global opportunity are particularly exciting.
Michael, are you an Aussie bull, or do you subscribe to that pretty ordinary economy we rely on, resources and maybe a housing market, and that's about it?
No, I'm an Aussie bull, but not for those reasons. I think that we're a very entrepreneurial country, so you can always find Australians who are willing to make a dollar and try and float something and bring things to market, and it all happens in that smaller end. And so many of those really big companies today have come because you've had one guy that's had drive and he's listed a company, he's been passionate, he's built a business.
And do you think we'll do better than 5.4% over the next 10 years?
I think you can do better than 5.4. I don't think the market will do better than 5.4 in the short term.
Okay. Neil, got a view over the next 10 years? You'll get your dividends, as you said, yes. But can we get price growth to more than 5%?
I would expect the total return from the market to be better than 5%, and I think investors should be looking to add 5 or 10% to whatever the market does by being really selective.
There you go. It's not all doom and gloom. The worst may be behind us.